Sorry for the late intro. Happy Death Day, everybody. Isn't this crazy? This is why we got stop losses. Hate to see it. But, I mean, I did come out all right last night. Hopped on the Discord with everybody. I was playing the local low on sushi and caught a little bit of a long. Made back some of the money. So, I mean, now the account is sitting at more than it was. And I'm currently short on sushi for one more dip to the downside. But we'll cover that pretty soon. Let's get up and running. Switch over to the live screen. Yellow. Good day. Maybe for not some. Saw somebody in the chat said they lost their house. How'd you do that? All right, crypto didn't ruin your life. You did. All right. Now, I don't know how honest you're being with that. No, you said you put all your money in BitConnect. Okay, never mind. Never mind. He's joking. All right. Let's catch up with everybody. Bufo on the beat. Is it time to panic yet? Absolutely not. Never a time to panic. Unless you're Longle, it's time to panic. SWYD. Hello, hello. Big Daddy. Thanks for making me say that. Hello, how you doing? Zero Crypto. Hey, buddy, how you doing? Sabotage. I lost my house. I put all my money in BitConnect. I can't frickin' breath. Ugh. Buy the dip, they said. It will be fine, they said. Kite, you on Twitter? No. I have a Twitter. I don't post to it all, though. Am I in any shorts? I'm in a short on sushi. That's it. Nothing else. All right, let's start covering what happened. All right. Now, I'm sure there's a thousand things out there telling you why the crash happened. For me, for all intents and purposes, it's just the course of nature. We had the ABC top right here kind of calling it out. That's what we took our original short on, but I ended up taking profit on that short around the 54K region because I did think that was going to be the bottom. We got proven wrong. It is what it is. We made some good money on the way going down. Obviously got stopped out a whole bunch of times yesterday trying to get the longs. Ended up all for nothing. But last night on sushi, and go to the sushi macro chart, this position has now been opened. All right. We were playing some of the smaller time frame ABCs coming off of this larger one right here. We got A, we got B, we got C. And that could have well as well worked out, but it didn't. So now what do we open with? We have an open long once we get back above 5.981. And that will turn into the macro ABC structure right here. So once we get back above that level, I will be long from there. But until then, I do think that we have one more dip to the downside. I could be proven wrong. But on the smaller time frames, if we go down to like the 5-15 minute, we can see coming up here, we have long uptrend, little cut to a downtrend. And right now we're trying to work out some sort of C wave. Now this could as well be us trying to get back above that level that I just said, and then shoot to the moon. Could happen. But for right now, as long as we're below this A, I am short. Currently, I am short from $5.87, and we'll be holding on to it. I'm trying to think that this will form some sort of 1-2 structure, or if you want to call it just a pattern, Adam and Eve. We have a sharp decline, sharp incline, creating the Adam. And then hopefully we go down into some sort of Eve. Now, if we go back to the macros, like the 4 hour, and we go to the uptrend that started all this, What we're going to do is we're going to go through and mark out all of the local lows. So we're going to start at the very, very bottom of this uptrend and work our way up. So anytime we see a break of trend that creates a new local low, we're going to go ahead and mark it out. So we got 1, 2, 3, 4, and this was the last one, but that's way up there. So last night, this is what I was playing off of. It was about 5.2, if you want to call it that. And I took a little bit of a long once we got back above it and took profit on it once we get closer to that 5.9 level. And that netted me about $700 worth of profit and was a good addition to the account. Account's now sitting at like 1700. It's kind of fluctuating back and forth with this short. But if we can come back down to that 5.2 level, that correlates to the 0.618. So there is a chance that it will just find support at that local low. I'm aware of that. We'll be watching that as it develops. But if, price action wants to go a little bit lower, fake some people out, definitely that 0.441 to 0.382 region is probably likely. And that would form, a 1-2 structure if you're talking Elliot Wave and Adam and Eve, if you're talking just regular patterns. Or if it doesn't work out, we get back above that 5.9 level, and I'll be long from there. That's how I'm working out so far. BTC doesn't have really anything open. I'm not really scanning for any ABCs. But with a little bit of foresight, we can see that one might be developing. We have an uptrend here that broke into a downtrend, and we're kind of trying to go put in a higher high here. So this might be a short entry for BTC if that does develop. Now that's obviously a much smaller time frame than we're used to playing. I really don't recommend trades like that, but if you are itching to get into something, try to calm yourself down, but it's not that big of an issue if you just wait. Until we get back above 53.3, there's really not much to do. If you want to play the smaller time frames, be my guest, but don't be surprised if you get wrecked. Ethereum, on the other hand, is actually sitting pretty. We are back above the A of the larger ABC structure here. You can see that we have top, bottom, top, bottom. A little bit of a crazy looking ABC, but it is what it is. We're back above that A right now. So if we are going to go back up and retest and still get rejected, we would probably be looking for kind of where we're sitting right now. Okay. All right, you can see right here, 0.441, 0.382 region. We're testing it now. So if we are going to see a rejection, we're probably going to see it pretty soon. Let's go down to the smaller time frames. It looks like we could form an ABC right now on Ethereum. Like I said, if these coins are going to bottom out and continue going to the upside instead of just still free falling, they're probably going to build some sort of Adam and Eve or 1-2 structure, depending on how you're looking at it. Let's look at KDA. KDA down to $12. We are far, far away from that original entry. It's ugly. Market's ugly now. But, I mean, it is what it is. Depending on how you want to play this, you got multiple different entries. This is your closest. That's going to be about $14.76. And then, let me take a look at some stocks real quick. AMD's still sitting pretty. You can see it's coming off of an ABC top right here. That would have been your short entry. So, US 100. I was taking a look at this last night, and I mean, everything's kind of shaping up in the traditional markets for some sort of rebound. Obviously, everything's still falling. I get it. But if you look at the market as a whole, it's building bullish posturing for some sort of push to the upside in the near future. It's definitely changed my opinion on how I think things are going to work out. Obviously, if we stayed up in that 54, 55K region, I do think, 2 to 3 weeks would have been appropriate enough to kind of reach the targets that we wanted to reach. Now, I'm not too sure. Either one, end of the bull market came early this year, or two, we'll probably find some sort of top around maybe mid-January, mid-February. We'll see. But you can see right here, we have a triple correction on the US 100. This is basically taking a bunch of different stocks and then averaging them out into the US financial sector as a whole. So you can see right here, we have an A, B, C. That becomes our first A. We have an A, B, C flat correction. That becomes our B. And we have an A, B, C, C wave. So we have the means to find some sort of bottom once the US 100 gets back above 15,764. Some people have talked about the fact that Bitcoin and the US financial sector are correlated, and that's not a good thing. You have to think of why that is. So when the US markets are pumping, why are they usually pumping? Is it because the economy is just doing so swell? No, it's because they're pumping tremendous amounts of stimulus into the market, inflating the dollar. So an asset that is hedged against the dollar and inflation might see a little bit of a boost as well. All right. So if that deflation, if the stimulus starts balancing out, you're going to see a pullback in Bitcoin. So there's nothing too worrying about that. If U.S. financial sector finds a bottom, we could assume that BTC will as well, because I don't know. Maybe with this pullback, that might pump more stimulus into the markets. We don't know yet. But you can see the US 100 is actually very, very susceptible to ABCs. You can all the way back here. I mean, if you just look at it, let me go ahead and take a look at the Heikin-Ashi candles. US 100. We have an A, we have a B, we have a C. And then we bottomed out. Right here, we have an A, we have a B, we have a C. We bottomed out. Right here, you can see an ABC as well, but you probably still would have been holding your entry from that one. Right here, we have an A, we have a B, we have a C. So right now, I mean, you could say that this is the beginning of the Great Depression, if you want to talk about the fact that right now, we have an A, we have a B, we have a C, with an ABC top right here. And we are approaching very dangerous territory. If the US 100 stays under 15,700-ish, that could be an ABC top that is absolutely destructive by all intents and purposes. And obviously, on the macro chart for BTC, we do have an ABC top. So this could be what's affecting it. Obviously, I was hoping the smaller time frames would push up a little bit more before we saw that come into real big effect. But it's to be cautious of. Definitely doesn't look appetizing, but we're playing the entries as they come. So like I said, right now on BTC, we're far from a decent long entry. Ethereum had one, but it's it's back in that territory where it's retesting, where it might see a rejection. And then, altcoins, given that fact, BTC and Ethereum being in those positions, altcoins definitely something to be wary of. Playing sushi, seeing what I can do with it. But by no means am I, trying to do crazy trades. And I just got stopped out on sushi a little bit ago, but I'm going to be playing the entries as they develop. So my new entry here. Give me 1 second. New entry 5933. All right, so I got the two conditionals fighting over which one's going to get entered. Let me go ahead and change this one real quick. Like I said, we got the local low at about 5.976. And then we have the developing ABCs as we're making our way up in this uptrend. So right here, if we do come back below this local high right here, I'll be re-entering that short. Why do we trade crypto if traditional markets are always going up respecting ABCs? For me personally, it's crypto has percentage opportunities that the traditional market just doesn't have. And to find a reputable website that offers the type of leverage that we can use on, say, Bybit is very few and far between. For most US regulators, I think like 5x leverage is like the maximum you're going to find. And that comes with a whole lot of stipulations. So pick your poison. Again. All right. I'll do a couple coins, but come on, guys. We've talked about BTC, Ethereum, and the US financial sector. I'm sure your coin is looking good in respect to those. I mean, Luna's still pumping. That to me is insane. That we haven't really even seen any effects from anything else. But we can see an ABC top forming right here. If the market is going to continue dumping, this is where you would want to go ahead and hedge against your Luna trade. XRP. Looks like we had a couple local lows marked out for XRP. We had one right here, and then this one right here. We got a bounce off of that. But you can see right here, XRP does have an ABC bottom that could possibly be forming. And it recently just got its entry. Unless I screwed up on trying to test that entry right now. Could possibly see a rejection though. Put the cans on real quick. Listen to some of this jazzy music that I hear in the background. Okay, do you have any crypto that you're holding long term or have any conviction in? We talked about last live stream, Numair, basic attention token, and of course Monero. Alex Jones coin. It always trips me out when I put the headset back on because the real-time feedback just trips me up. Kite, how's your buddy? I got him a new cone. I got him one of those thunder jackets. The thunder jacket doesn't really work. Like, just because he's a weird shape. So the like strap that's supposed to go around the front of him, like usually dogs are supposed to have like a little bit more of a chest area. He doesn't have that. So it ends up just making it so he can't walk, and then he just ends up like stepping over it. Are the Moon Boys lying about BTC making it 8K? Well, I guess if you're saying it like that, I was one of the Moon Boys. I'm not lying. I don't think anybody absolutely knows for a fact that it's going to go to those levels. Anybody that was saying 80K, I think that's respectable. People calling for like 200,000 and stuff, those are the ones that are like, what are you talking about? But 80K was a respectable number to have in mind if we did happen to go back into a little bit of a bull market. Unfortunately, just not how it worked out. He's a pug. Okay, I'm trying to get my kids into reading charts. Have any suggestions that maybe got you interested in your younger days? I didn't get interested into reading charts until I was like 17, 18. Obviously, I had the reason why I was more eager to look at charts than the next guy was because I actually had an interest in crypto itself. So I mean, if you can teach them about crypto and why it's a good thing and what it could possibly do for them in the future, then maybe they might be more susceptible to wanting to look at charts. So right now we're trying to see if we're going to get a rejection or come back above that 5.976 level. So I've been playing mostly this entry right here, but now this new one developed right here. It's kind of a sticky situation because they're so close to each other and they're almost overlapping. What are the trading mistakes you have done / still doing? I wouldn't say I'm doing any mistakes because I'm going by the book of what my trading strategy calls for. Obviously, you got people that go, I saw you dumping the big dumpy coming from a mile away. All right. I'm not that exposed to the market. I'm doing good. But the biggest mistake was, like, let's say I was in a short yesterday. Not in a short, in a long yesterday. Let's say I was taking those longs, and instead of being appropriate and setting up a stop loss, I just let them run. And let's say I started getting close to a liquidation point. I add more to the losing trade in order to make sure that my liquidation point gets even lower. And then we start pushing it again and again and again. And eventually you're building up such a large position that if you do get liquidated, you're easily losing 40 to almost 100% of your entire portfolio. The people that can't let go of losses are the ones that lose the most. So my strategy, I have very, very slim stops. All right. If it doesn't immediately go my direction, I'm out of the trade. And that's what allows me to push risk to reward ratio to like its absolute limits. So other people that might be going off of indicators and kind of feeling out the market and trying to time it and predict whether or not it's going to blast off to the upside or have a huge dump, they tend to do worse because they don't have like, I'm not saying that they don't have stop losses, but they can't be as precise as I can. And like I said, when I take these ABC trades, it's not for me saying I know for a fact that when it gets back up at this level, all is said and good and it's going to go to the upside. It's just about using previous price action in order to make a accurate judgment. And because of that, I can set up a static stop loss that has good restored ratio and makes the most out of the price action. That's the biggest mistake. I've done it in the past. I've done, back when we were in like the little tiny short-term bear market in like 2019 to, early 2020. I would DCA losing trades, and it's some of the worst losses I've ever had. Don't do it. It's stupid. And like, the reason why people get caught up doing it, because maybe they got the idea from a YouTuber or something, and they do it once, and it ends up saving their ass. And then, obviously they put so much more money into the trade, they make a lot more once it does pop off to the upside. So to them, like, that clicks in their brain and it builds up like a pathway that this is how I'm supposed to do things. And because it worked once, they're more likely to do it again and again and again. And eventually it burns them, because although you might have been able to make 10, 15, 20% to your portfolio in that one trade the time that you did it and it worked, what if next time you end up losing 60% of your portfolio because you did the same thing? Do you take profits multiple times? No. Usually I have a set take profit, and I'll play it by ear. Like if ABC forms before my take profit and it goes into active territory, I'll take my profit. Now it has to be a proportionate size to the one that I'm actually trading. If I'm trading a macro ABC and then we just have a short-term time frame ABC, yeah, we might have a little bit of a pullback, but I don't think it's going to be massive comparative to what the one I'm trading is. Gotta have a little bit of confidence, a little bit of luck. And how do I open your strategy calculator? If you're talking about the Excel web sheet, are you talking about the one that you can take your win ratio and your risk reward ratio and kind of simulate over a period of time, or are you talking about the risk reward ratio calculator? You just said yep. Which one? The first one? You're not giving me so much information here. Okay, the strategy one. Yeah, so it loads in Excel, and you gotta make sure that you enable macros. You can run it through a virus scanner. There's nothing on it. And then you put in how much you're starting with, what your risk reward ratio is, what your win percentage, and you hit calculate. A lot of people message me and they're like, the calculator's not working. It gives me a different number every single time. All right, you gotta understand what it is. All right, 15% is independent of the next spin. All right, so per trade, it's a 15% win ratio. All right, you have a 15% chance of winning that. So if you spin the wheel out of like 1,000 trades, you might win 30% of them, even though your static win percentage is only 15%. That's just luck. And you gotta understand that's what the market actually is. The market is literally just luck. Once you stop trying to pretend that you know exactly what the market is going to do, all the people that come into my channel and go, this indicator, that indicator would have saved your life, you would have called this dump, blah, blah, blah. Once you stop pretending that these things can actually tell you where the market's going to go to a definitive degree, that's when you can understand what the market actually is. The market is luck. And within that luck, there is repeatable patterns that you can create static stop losses, static entries, and push those limits of risk to reward ratio. Once you do that, you're going to be sitting a lot prettier because, one, that gets rid of the anxiety that you have to predict where the market's going to go. All right, if you always have to predict where the market's going to go, you're going to be sweating bullets all the time because it's such a huge job to be in control of something so large. All right, you're trying to play God with the market. But once you get rid of that anxiety, you can just chillax. And even in dumps like this, as long as you're doing it appropriately, you know, I had points where I withdrew some money. We talked about those for months ahead of time. Even though my thing was I'm bullish, I think it's going to go to 85K. I said if we go back below that last local high, I'm going to withdraw my inverse perpetual and put it back in USDT, and I did so. It saved me a whole lot of money yesterday. And that point was right here. That was the local high that we put our money back into inverse perpetual. And as long as we stayed above that, I stayed in inverse perpetual. But now I'm pretty much in all USDT. So given that fact, I am focusing a little bit more on sushi since sushi is just USDT. You can't really play it with the inverse. Guy, do you use 50x leverage or 75x leverage on BTC? Neither. And it's not about the leverage I'm using. It's about my margin and what my risk from margin is. I'm using 10x leverage, but that's with like 50% of my portfolio. Hey man, any advice for a new trader where to start? Okay, so if you're a new trader, don't try to start by figuring out what you're going to do. All right. Don't go on YouTube searching up best trading method. Don't watch my ABC tutorial. Don't look at strategy. All right. It's all about getting your psychology and your mathematics down before you go start trying to find a good strategy. Because if you understand what a good strategy needs, it can help you figure out which one that you want to kind of go towards. So if you go to my channel and you look at the leverage trading tutorial, all right, you'll see my face on it. You know, it's very easy to find these videos just because all my live streams have the same exact thumbnail. This one right here, leverage trade correctly, R&R math tutorial. That goes through all the mathematics that you need in order to find a good strategy. All right. And then go read Trading in the Zone and read that book before you do anything, because you're going to make the mistakes. The book doesn't prevent you from making these mistakes. But what reading this book will do is you're going to have all of the mistakes that common traders make in your brain, so that when you go and you make those mistakes, you can identify that you're doing it. And you can go, you know, either stop yourself from doing it, or maybe you understand that you're doing it, but then you just have to do it in order to see that it really doesn't work. However it might be. All right. Once you have that down, then you can go watch ABC strategy tutorial. You can go watch market cipher tutorials. You can go watch this or this and that. And you're going to find out that most strategies, most of them are missing some core components that take advantage of price action the best way you can possibly take advantage of price action. Well, if the market is random, then how come trends exist? All right. Like I said, the market is random in terms of you as a single person in no way, shape, or form could ever predict to a 100% degree. I'm not saying that sometimes you might be like, okay, I'm a little bit more bullish than usual. I think it's going to go up because of this and that. And then it does. I'm not saying that that doesn't happen. All right. And as well as that, in that same exact statement, I said that the market does show repeatable patterns that can give you an inkling of where price action might want to go. All right. But pretending that this ABC structure will always mean that we're going up or down is idiotic. All right. There's never 100% certainty in the market. That's all I meant by that. I've lost like 5 pounds since starting my medication and getting my Planet Fitness membership. I haven't been too many times. I got it like 5 days ago, and I've been twice. Just because, you know, obviously I've been waking up a little bit later just because the market and how it's been acting. But you know, I do plan going. At the beginning of January, I want to kind of get a schedule figured out. Once I get my new refill and the prescription's supposed to be, you know, closer to what I think it should be. You know, I want to wake up somewhere around 9, 10 in the morning, get ready, take a shower, clean up the room, do some stuff, and then hop on live stream around 12:30, 1 o'clock, end the live stream around 2:30, 3, and then be at the gym at least by 4. And I want to be there for about an hour. Right now, when I go, I'm usually just on the treadmill doing like a huge, like a, you know, like a 10 incline, and, you know, keeping the speed slow. Because the problem I have right now is my cardiovascular system is not up to par to really handle like high intensity workouts. My resting heart rate typically is sitting around almost 100 beats per minute. Now, the past couple of days, since I've been eating a little bit better and obviously I've had those workout sessions, my resting heartbeat has dropped down to 90. So, I mean, we're getting there. I want to get my resting heartbeat to like 75, 80 before I can do anything, because I tried to do, you know, high intensity intervals on the treadmill, and my heart rate got up to like 190. And I don't want to be sitting in that range for too long, because like 160, 170 is like the max that you're supposed to be. And I'm just kind of scared of pushing it too far and ended up killing myself. And I know the nicotine doesn't help the resting heartbeat. I understand that. But when I'm at the gym, you know, I try to not vape for like 30 minutes before I go, so that hopefully it, you know, kind of calms it down a little bit. You know, obviously I'm not like leaving the treadmill to go take a smoke break. It's not that, you know, crazy. So far I've done 2 60-minute treadmill sessions. You think any of the Moon Boys that were calling for 100K 2 days will lose any credibility with their fans? It depends on how they were approaching it. So you guys know me, like you know, whenever I make statements like that where I think it's going to go here or here, I preference that by saying Austin, you know, me as a person believes that we're bullish and I think we're going to go up. But the trader himself only worries about the actual setups that he sees on the chart. So the trader, you know, once we were back below this level, I'm not in a long. If we get back above it, obviously I was getting back into a long. But as long as we were below this level, I wasn't touching price action in terms of hoping that it was going to go to the upside. And obviously on that same live stream, we marked out the local lows. We said if we dropped below this level, we were probably going to fall down to about 50,000, you know, 51,000. But beyond that point, 51,000 was the last local low all the way until about 40,700. So that left up this entire gap And this is really important. This is why local lows, I think, are really, really powerful. It's another if this and that statement. So just like how I played the long position on sushi last night without an ABC, it's because I'm creating these local lows and I'm watching for price action and where, people would probably like to pick it back up. All right. So right here, obviously once we got back below this level, I'm waiting for it to get back above 53,331 in order to even re-enter along. But once we got back below this level, 51K, it opened up in an opportunity for price action to slip all the way back down to 40,000. So you definitely know that I'm not really eager to touch price action until we get down that low. So should they lose credibility? Like I said, it's based on how they approached it. If they were just screaming from the rooftops, buy, it's definitely going up, I think that they should probably not do that. But hopefully they're approaching it how I approach it, where like I give my person opinion and then I give the trader opinion. And the trader opinion is non-biased. It's based off of what it sees. So hopefully that answers that question. Looks like we're dropping a little bit on some things here. Up 300 bucks on sushi right now. We had a little bit of a tumble. Like I said, Ethereum is back above the A, but we are in a very, very precarious position because at the same time, we are retesting the 0.441, which, it's an arbitrary number. I'll give it that. It's not like it's a special thing, but if you're relating this to Elliot Wave, if this is like a 1-2 structure forming, typically it's going to retest the 0.382. So the 0.441 came from the fact that the 0.382 is usually what price action likes to hit, but sometimes we don't quite hit it. I always like to take my profit before the expected target. All right. That's where the 0.441 came from. And we found that that has worked out a significant number of times. That's why I kept it. Is there a local low at 46,800-ish? Let me see if I can see what you're seeing. Like it is. All right. But when we're talking about these local lows, it has to be a sizable local low proportionate to like what you're really looking at. So, I mean, if you're looking at this uptrend as a whole, all right, look at the size of this. This little tiny thing right here is very insignificant compared to the rest of the price action. So when we're looking at this, all right, we want to be looking at the really decent trend breaks, like right here, all right, and right here. Those are the ones that really matter. So you can see like price action tried its best to, stabilize support above this line. You can see we got a double bottom off of it. We slipped below it. Price action tried to get back above it. We really tried to keep that local low in place. That's where the bears and the bulls were fighting. But once we fell below that, the only real major local low that we can really find support at would be closer to this. Doesn't mean we have to get down to that level necessarily, but that's where the most support would be. All right. It's just like over here. So when we were talking about, the bear market, probably coming in a little bit sooner back around this level, you can see right here, we have an uptrend and you can see a definitive trend break. All right. So like right here, come on. Hate when it does that. All right. So like right here, and then we come up, trend break. So you can see, like, once we got the rejection coming off of this ABC top, we came down, we found relative support around here. We got a bounce. We couldn't hold it, so we fell back down. Right here, you can see it tried to find support. Once we slip below this level, there's no real support until we get to the next major local low. You can see price action came all the way down, found support, and then we could go forward. what is a realistic probability of winning a high restore trade for you? For me, like, I've shown 22%, but I would say realistically 15%. All right. David, oh my Jesus, that is loud. How do I get rid of that? Okay, we're gonna mute that. All right. David Tech has shown that the ABC strategy can have up to like a 36% win chance. And he's also shown that it can have a 12. All right. Which is all said and good. Like I said, if you have a 15% win chance and you're hitting 8 to risk reward ratios on average, you're gonna be sitting pretty. So take, for example, sushi. You know, let's say that we got stopped out like, I think we got stopped out like maybe 10 times yesterday. All right. And then let's look at the smaller time frame trade here. All right. And someone asked, where do you start your ABC count from? It's from the lowest or highest point from a recent trend shift. All right. So right here, downtrend broke into an uptrend, downtrend, uptrend. And obviously we use the smaller time frames here in order to find this entry. All right. So let's say for example, we lost like 10 times trying to get entries yesterday. But if I do hit this trade, and let's say for, you know, just all intents and purposes, let's say it doesn't necessarily go all the way down to the 0.441, because the local low is at, the local low is at like $5.22. So let's say that we just get down to that local low for a retest. All right, that's already a 14.3 restored ratio trade, meaning we made back pretty much all of the money that we lost yesterday plus more. And then last night, I was fortunate enough to just kind of play this entry as an if this and that statement. And I think I lost like 2 or 3 times trying to get the entry, but then I took profit right about there. And that was a 14 restored ratio in itself. So you lose 2 or 4 times, but then you hit a 15 restored ratio trade. You can see how it balances out. It's just all about like having these points in the market where you can kind of create an if this and that statement. Obviously it requires a little bit of luck, you know. Price action might not go the direction that you want it to. Have you ever abandoned an ABC setup, or do you keep chasing it? I've never abandoned one, but new ones form. All right. So, I mean, like, let's say, for example, I'll just draw an arbitrary one. So let's say like we have an A, we have a B, we have a C. Okay. So this is my original entry here. But then let's say that this forms some sort of structure like this. All right. Instead of, I mean, I'm still playing the macro ABC, but I can get an entry off of this now. So you can call it chasing, but it's always waiting for the next opportunity. It's not just, you know, willy-nilly entering for no reason. It's waiting for these supports and resistances to develop in real time. Because obviously the most recent creation of support and resistance is going to have a little bit more impact on than like previous. So that's where, like, if you're using strictly local lows from the previous uptrend, you're not going to have the most fantastic time because, like, let's say we go below this local low. All right. Instead of using this level right here or the smaller time frame level right here to get an entry, you would have never had the possibility to really get these entries. And then you know, you would have been kind of SOL as it was kind of retesting that line. If I do the math on 8 R&R and 12% hit rate, I lose on average, if I get that right. Yes. So if you have a 12%, you're going to have to get a little bit higher R&Rs. So if we bring up the Kite RNG, try to find that real quick. And I believe the R&R setups that David Tech was using was a 10. So if I have $1,000 and I only have a 12% win rate, and I'm getting 8 R&R on average, risking 1% of my portfolio over the course of 500 trades, I should lose money, right? Well, I kind of stayed positive, but not by much. There's no real growth in the account. We can see right there we lost 20% to our account over the course of 500 trades. It could be worse. All right, 500 trades is a lot of trades, and that gives you enough time to kind of reassess what you're doing, and hopefully you'll make a change along the way. All right, if you're 200 trades should be enough to show you that you only have a 12% win ratio. And if you're only walking with 8 risk reward ratios on average, what you can do is go back and look at your winning trades. Could you have gotten an additional risk reward ratio out of it? All right. If that's the case, that could change everything. All right. So even at its worst, all right, 12%, 8%, statistically losing over time, over the course of 500 trades, like I said, that's a lot of trades. You're going to have more than ample time to notice that this is not going to work long term and make small tweaks that are respectable in terms of like not, going from an 8 risk reward ratio to a 16 risk reward ratio. But if you look back at the winning trades, could you have gotten 1 additional R&R per trade on average? If that is the case, that could change everything. So if at this point in time you notice that, this is not working, but you can statistically, based on the past, have gotten an additional 9 instead of an 8, could you make back the money that you lost? Yes. So the next 500 trades, you are now $286 positive from what you were, 28%. So let's go ahead and another 500 trades. Okay, small growth. And then we doubled the account. So you can see how it's a little bit of RNG. All right, the first 2 100s, 2 500 trades, we only added like, 30% to the account, and then another 30%. And then the next time we doubled the account. And that's how the market actually is. All right. The market is not this static thing that is going to pump out a static number every single time. There'll be times where the ABCs are absolutely hitting it like nobody's business. And then sometimes it sucks. All right. Just how it goes. All right. But if that is the worst that's happening and you only lose 20% over the course of 500 trades, you have more than ample time to recalculate, reassess, are your entries good enough? Is that where the problem lies? Are you not really milking price action to the highest degree that you could have? That kind of stuff. If you want to find this RNG calculator, go to the leverage trade video that I pointed out at the beginning of the live stream. But like, let's say for, example, let's say that we still have an 8 risk reward ratio trade, but, maybe our entries were lacking. All right, maybe it's because we were playing too small of time frames. And let's say that once we switch from playing like a 5-minute and really zooming in on our chart, trying to play the most small structures, let's say we went out like to the 15-minute and zooming out to the 15-minute in the structures that we were playing on that time frame, let's say that we added 3% to our win ratio. All right, so then that would bring us up to a 15%. Let's run the simulation again. Do you see what I'm saying? All right, maybe I didn't do that right. Maybe let me clear the chart. Let's try it again. All right, so you can see how these very, very small details, maybe 1 risk reward ratio here, 3% to the win ratio here, can make massive differences in what the outcome of the account is. That's why you have to be really meticulous about where your problem areas are. Are you not holding your trades to the maximum profit that you probably can most of the time? Or are you playing too small of a time frame and you're sacrificing your win chance? Those are the things that you have to address in order to play properly. All right. Zooming out to a higher time frame, playing larger structures could net you a higher win percentage and maybe even a little bit more higher risk reward ratio. See what I'm getting at? And the market has a lot to do with it. Like I said, in a bear market, ABCs might be doing well, really, really well. And in a bull market, you're trying to short every single top, so maybe your win chance goes down a little bit, but when it does hit, it does hit. But then, you still have these opportunities to long these ABC bottoms. It's all in due time and figuring out what your problem areas are. How do you calculate the win chance for that simulation? You track it. All right, if you want to use the ABC strategy, keep track of your trades. What is your win percentage? All right, even back in August, my win percentage was 22%. And I was shorting like every single top. But I did catch a couple of these bottoms to kind of balance out what was happening. And we made some good trades. Don't you think that we can go into a similar consolidation phase like we did in summer? Slow down in the market for a couple of months before an all-time high? Could be. We'll see what the market wants to do. Do you enter after we break and close above? I don't wait for candle closes. I work off of real-time price action. All right, if this and that statements. It is either true or false. Are we above or are we below? There is no in between. There is no candle close. It's all happening in real time. And that's the hardest part to try to get someone to get into the mindset of. People will come to my channel and I totally get it. They want to share what has worked for them and what they feel is best in terms of like this indicator or that indicator. I've been in this market for a very long period of time. I've used a lot of different indicators. And I have made the executive decision for myself and my account to not use indicators for various reasons. Most importantly is just the overconfidence / confusion that you get from using indicators. All right, when I first bought Market Cipher, I bought it for 0.1 BTC. So I bought Market Cipher for $5,000 and only got 1 year subscription. Let that sink in. All right, so when I bought that, I felt like I was on the top of the world. Nothing could beat me. It gave me this confidence that I wouldn't have had otherwise. And yes, I made some money because of that. But after that confidence wore off, trying to look at multiple different time frames and all these different things and trying to time the market and not having a definitive exact point of entry to have a static stop loss, it killed my account. Not in terms of like I lost everything, but I was not seeing the growth that I wanted to see. So over time, I kind of transitioned a little bit away from Market Cipher, went to GonFans, went to this, went to that. And then I started to develop more of an if this and that type statement just to make math my friend. Instead of trying to predict what the market was going to do, I predicted what the math was going to do. Get high on math, not indicators. Where do you learn how to do Elliot Wave and where do you recommend beginners to start? if you want to learn like just strictly Elliot Wave, a visual guide to Elliot Wave theory is a really good book to start with, because it's, it's like a kid's book almost. But like I said, when you get into Elliot Wave, a lot of people tend to care more about targets and the retracements and the extensions and hoping those numbers get hit. Elliot Wave, if done properly, is about taking multiple different counts and seeing where the majority wants price action to go, and you can kind of make a better judgment off of that. So after that, I read A Case for Modification of Aura and Elliot's Impulse Wave Structure by Ian Copsley. Rewind if you want to hear me say it again. I'm not going to say it again. And that kind of led me to the ABC structures. And people go, well, 1, 2, 3, 4, 5 is what the upside likes. Yeah, it does. I mean, see right here, you can see 1, 2, 3, 4, 5. But if you look at it, you can see uptrend, downtrend, uptrend. So it's an ABC, but you can see you had another alternative entry. We talk about how sometimes that can happen. And that's how I led myself to start taking ABC trades. Just simplifying it, making it a little bit easier on my mind to, really get. Because, I'm kind of like a two-way street here. Obviously, I do the YouTube channel side of things, and I want to help as many people have a profitable account as possible. But at the same time, I'm trying to also make a strategy for me. So I'm trying to make sure that the strategy that works for me is also easily understandable and easily teachable. So it's a little bit of both. Obviously, if I wanted to, I could be using the most complicated strategy in the world, talking about, 1,000 different fib extensions, WXYZ, blah, 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 blah. The people that do that and try to make a living, doing YouTube or something with it is absolutely dumb. All right. Most of those people, they're just trying to sound smart and talk about 1,000 different things. For me, I'm big dumb guy. I'm monkey brain, Austin, dopamine seeking monkey man. All right. ABC. That's all I really need. If it's paying off, it's paying off. Ain't no reason to really, do much and try to make myself sound smart. Can you show your Discord? Sure. I don't know what you're looking for. General chat? You can see us talk about a whole bunch of stuff. Kite's thoughts. We posted this last night, and then this is, kind of the early developments of the trade that I'm currently sitting in. Do you believe that Elliot Wave really is a product of herd mentality? If so, does it show up anywhere else in life? I mean, yes. Elliot Wave shows up everywhere in life. All right, you look at trees, conch shells, universe, 1.618 Fibonacci's everywhere. All right, it is almost like, you can call it God's thumbprint of mathematics. So I believe that there is a truth to Elliot Wave, but there is a lot of problems with how humans use Elliot Wave. They think it's like the end all be all to their problems. There is people that use Elliot Wave absolutely correctly in terms of, finding out the different possibilities and the trajectories that price action can go, and then using it to kind of simplify down to what is the most likely. I get that. But in terms of me trying to use it on stream, I'm always going to have people that ask 1,000 different questions that are absolutely needless. Even with ABCs, we see people asking questions that are, I don't not like it. I get it. You're trying to learn what I'm doing. I appreciate that. But some of those questions are just something that if you just thought a little bit with your own brain, you can find out. How do you not lose your mind when, prices action is bouncing around? It's just because I'm used to my own strategy. I know exactly what I'm getting myself into. The problem is when people, look at ABCs, just like with Elliot Wave, as the holy grail. They see me point out ABC after ABC, after they worked out. We have ABC to the downside, ABC to the downside, all these perfect entries. And then when it comes to real-time price action, they are not being realistic of what they're getting themselves into. If you want to make crazy high risk-reward ratio trades, you better bet you're going to be putting yourself in some high-pressure situations for a short period of time. But once they pay off dividends. The people that get stuck and start crying about this and that is because they really don't have the realistic expectations. They see the holy grail that ABCs possibly can be, and then they use 10% of their portfolio per trade, and they lose 5 trades in a row, and now they lost 50% of their account. And they're, saying, this is the worst thing I've ever possibly used. Blah, blah, blah. I used this indicator. Tell me this, that. Have fun predicting the market, buddy. It's not going to work. I'm all about working with the market rather than trying to predict the market. Obviously, me as a person, I have opinions of where the market's going to go, and that's okay to have. But learning how to separate those two sides and really trade mathematics and with a purpose on this side, and then it's okay to have opinions of where you would like to see price action go. Because obviously, if you're taking a long, you want price action to go to the upside. You're not going to take a long and then say it's going to go to the downside. It's okay to take a long and understand that there's the possibility of going to the downside. That's okay. Would you ever sell a trading course? I mean, not really. I mean, I put out the ABC tutorial. I put out the leverage tutorial talking about all the mathematics and what I've learned and what I've created so far. Those 2 videos alone can be a standalone trading course for a very good period of time. I mean, I appreciate the people that sign up for the Patreon. That's, to me, the best way if you want to, give me some financial feedback of what I'm doing. But making a trading course, 2 things. 1, already made those videos. I think they can stand alone as a trading course for themselves. And 2, making a trading course kind of puts me in the league of people that I don't want to necessarily be associated with. Now, Ryan has a trading course. He's my buddy. All right. Do I agree with every single decision he makes? No. All right. That's a part of being somebody's friend. I don't have to agree with every single, thing that they do. And I will call them out on the things that I think they're doing wrong. But a lot of crypto YouTubers have these trading courses, and I just don't see... I just see potential problems with those. ABCs don't seem to work on forex pairs. All right, give me some. I know for a fact that the Australian dollar works quite well. All right, right here, you can see a definitive uptrend, break into a downtrend, break into an uptrend. You got an ABC top calling this entire bottom. If we go out to a 4-hour here, all right, you can see A, B, C here. You can see an A, B, C here. You can see an A, B, C here. Even a smaller time frame ABC couldn't even gotten a better entry. You got an ABC here. Got an ABC here. Got to an even higher time frame. Daily. Got an ABC here. This entire thing, you see a gigantic downtrend, uptrend, downtrend, calling that low. I really don't see, like, on the 2-day, I don't see an ABC coming off this low, but I'm sure on the smaller time frame, you could find something like right here. You could have used that. Not saying that I would have, but, you know, it's something. Right here, you got downtrend, uptrend, downtrend. You could have got an entry there. What's some other ones, like Canadian dollar, US dollar? Right here. You got an A, you got a B, you got a C. Okay, you got an A, B, C. There's just 2 coins, but I mean, you got AMD as well. I made some high school kid rich with ABCs. Not really. Like, he was in a class where he had to use like a fake portfolio to get an A in the class. But I told him about this ABC right here on AMD. He took that entry, got an A in the class like a couple days later, like weeks ahead of time, out of, you know, everybody else. Right here, you got an ABC. You got an ABC right there. You can see a lower low. This one was like a really like shitty one. Like stuff like this will happen. Like, I'm not denying. Like, you might have an ABC like this, and you might take an entry here, but then might end up falling through, and then you just have to kind of stretch this out a little bit, and then just play this entry. I mean, just look at that entry on AMD right here. Boom, boom, boom. I mean, it's plenty. Like, I'm not saying that ABCs are like what's always going to happen. There might just be a top. Like, there might just be a straight top, no ABC. But the reason why I use ABCs is not because I think they're the most prevalent thing in the markets, and that every single time that we see an ABC, it means that we're going to the moon or going to, you know, zero. All right. The reason why I use them is because this specific pattern allows me to do simple things like set a definitive point of entry. I know exactly where I want to be in a trade, exactly where I want to get out of a trade, either a win or a loss. And from there, I can milk price action very well. Why do you stream? I started live streaming a long time ago when I first got into trading, just kind of a way as like logging my own progression as a trader myself. Then a lot of people started watching me, just following along, you know, my journey. And, you know, through that, I kind of got a knack for teaching people and answering questions. And I fell in love with it. And it's one of the ways that I keep trading interesting for me. Because on, you know, months or weeks where price action is really just kind of, you know, price action, there's nothing interesting, there's no major dumps, no major pumps. Day trading is just a monotonous day job to me at this point. It's as simple as ABC. I know exactly what I'm doing. It's static, it's robotic, it's boring. All right. Obviously, when you make good wins, it's a good feeling, it's a dopamine rush. But eventually, after a long period of time, even that starts to subside. So, you know, dealing with people, answering questions, relishing wins, you know, feeling losses with other people, it makes it interesting and fun. So that's why I live stream. And I think it's the best way to really understand what I'm doing. I think, you know, I could be sitting here just pumping out 10-minute videos every single day about the market and all this, but you don't get a good, genuine view of who I am as a person, how I react to situations live, my thought process as I'm working out, you know, my ABCs and how I trade. That's invaluable if you're actually trying to learn or copy what I'm doing in terms of my mindset and how I trade. What's your average success rate at the moment? I don't really keep track anymore. I'm very bad at that. I would say like the past couple of weeks, it's probably been very low, 15, 10%. but the risk reward ratios themselves have been massive. The recent short on BTC, right, I shorted from 67K off of this ABC top right here. Now, I wish I would have held on to it, don't get me wrong. You know, there's always those things that, you know, I shoulda, coulda, woulda. But I ended up taking profit around 54K when I believed that we did hit a bottom. Obviously, I was wrong. But that being said, I still took profit, and I regret taking profit, but at the same time, it's profit, and there was a lot of it. I took profit around this level right here, and that was a 23 risk reward ratio trade. So, am I mad? Not at all. And like I said, last night we made a 13 risk reward ratio trade just on the rebound from sushi, and if it does continue slipping to the downside, you know, it could be very profitable to the downside as well. Are you taking profits in halves or quarters? Nah, not really. Most of the time, I will either hedge the position or take full profit. For me, there's really no in between. For me, it's more of like making sure that even though I'm not tracking my statistics, I can kind of count more towards one thing. If I take my profits in halves or quarters, that does start making the math a little bit more complicated on what my average R&R is. So I'd rather just definitively take my profit at like a 10 or a 12 or the 0.441. How did you arrive at your predetermined stop losses for BTC and shitcoins? Just time, you know, kind of figuring out what I wanted and how far I can push, you know, what I'm doing here. At first, when I started playing, you know, Elliot Wave and ABCs, you know, that type of if this and that type play style, I definitely use more of like a 1%, 2%, even 3% stop losses. But at the same time, I was sacrificing my risk reward ratios. And once I saw that these ABCs were working out more often than not, you know, not in terms of like not getting stopped out more often than, you know, less often than that. Obviously, I'm not winning 50% and more, but in terms of like the actual structures eventually working themselves out, I started figuring out, hey, if I reduce my stop loss and up my leverage, all right, does mean I probably will get stopped out more, but the risk reward ratio is going to be so much higher that if it doesn't stop me out, you know, such and such amount of times, it will be such a more profit than I'm used to. I started playing it like that. Because there's times where we enter trades and they work out flawlessly the first time. Now, I'm not saying that it's every single time, but sometimes, yes. All right, so let's say like right here, for example, like let's say we were playing this ABC, and instead of having the mentality of holding it until we got like a massive rebound, let's just say that we're playing the 0.441. And obviously this always sparks the questions, when do I play 0.441s and when do I, you know, wait to take profit until a moon? It's up to you, man. I don't have a definitive way of doing it either. I'm not the one to be asking. All right, but right here, for example, if you're planning out a trade and the trade itself already, if it does work out, doesn't have the type of risk reward ratio that you need in order to make the trade, don't take it. All right, but right here, if I measured out this trade and even to the 0.441, it's a 15 risk reward ratio and I took profits, that is massive, massive profit. And it would have been a one and done. All right, I would have entered, not gotten stopped out once. That would have been all profit. And that means I can lose an additional 15 times in a row after making that one trade and still be exactly where I started. So if I lose 5 times after that and then make another one, you see how that can build up over time. I saw somebody in my chat in the Discord playing this ABC right here. I don't know if they went through with it. Like, it's definitely a very small time frame, don't get me wrong, but I mean, it was an ABC and it would have worked out pretty much perfectly. Only problem is like you can't really count on it going past that last high, but would have worked out for him. Because that right there, even with like a 0.5% stop loss, it's probably a good chunk. Like, let's say they just played that ABC and waited for the next ABC top. Let's say that once that ABC top formed and then came back below that level, if they took profit, that's an 11 restored ratio. That's pretty good. So hopefully we're retesting right here and then we're going to have a blip to the downside. I mean, if you come back over here, when we dropped from, crap. When we dropped right here, you can see how it reacted, had that bounce to the upside, came back down. It's probably going to be a couple days, maybe a week until this works its bottom out, if we're going to see any more upside. Could always dump a little bit more. Definitely, like, the one thing that is like on my list to watch out for is obviously the current ABC structure that we have is ABC. But if we do form a lower low after having this jump up here, like this, that could be definitely an entry that I'll be looking at. Because that does correlate to almost that level right there. Do I have a preferred time frame? 15-minute. That's my preferred time frame. Now, like, I'm used to looking at the 15-minute on a 4K monitor, and I have a lot more screen real estate in order to see more information on the 15-minute. So, like, on a 1080p, probably like a 30-minute is more likely what I would like to use from now on. You know, on the 30-minute, you can still see some of the smaller time frame entries, like right here. You can see A, we can see B, we can see C. So, I mean, you're not missing out on much, but obviously price action, like what we're currently sitting in, will definitely be hard to play. I'm not saying that you can't play the smaller time frames, but like I said, if you're seeing a disparity in the risk reward ratio versus the win ratio, most of the times if you need to get your win ratio up, it means you need to back out your time frame and start playing, you know, larger structures like this. Like if I'm, you know, getting absolutely demolished playing within this, right, back out and wait for larger structures such as this in order to get your win ratio up. I mean, like right here, for example, you didn't even have to really deal with a lot of the headache that this entry caused. Me personally, I did miss this entry right here. You can see downtrend, big bounce, B, and then downtrend again. You could have got an entry from here and skipped the entire process of dealing with this entry, and it would have been pretty much home free all the way to the upside. So definitely the more attention that you pay to the larger structures and then use the smaller structures, the better time you're going to have. So typically, like I said, when I'm looking at larger structures, I'll play it like this. If I have an A and a B, I'll try my best to use the C waves entry, you know, like right here, for example, instead of wait for the A. Why do you use the 1080p? What happened to the 4K? Like I said, with the addition of my new medication, I'm finding a little bit more interest in video games again. And since I'm, like a competitive gamer type guy, I switched back to a 1080p 240 hertz monitor. And I have my 4K over here, which, I mean, for live streaming is okay. Because most of the time when I send the information to YouTube, it's usually at 1080p or 1440p. So it actually it makes it a little bit easier for people that are on mobile devices to actually see the stream. And then over here, I have more screen real estate so that I can still trade on this screen. I can still look at my Streamlabs, and I have more than enough room for chat. So I don't regret, having a 1080p screen, but there's some advantages definitely to having a 4K for trading. Would it work on the 1 minute chart for scalping? Yes, but like I said, the smaller the time frame that you go down to, the less your win ratio is going to be probably. The only people that can do well on those time frames are that can keep track of the absolute macro and where it wants to go and incorporate that all the way down. So you'll have macro structure, medium structure, medium microstructure, microstructure, microstructure. You're going to have all these things going into your trades. It becomes a lot harder to really make sense of what's going to happen. What software do you use to automate collecting all your trades into a report for your accountant? I mean, Bybit and Coinbase both have CSV files that you can just download and send. I don't understand how hedging works. So it doesn't work when it's choppy, but like, okay, for example, all right, this was a really good one. This was my last real hedge trade. All right, so we caught an ABC top from right here, and we had the original short, and I took profits at 43K. All right, once I took profits, I waited for the next available setup, and that next available setup, for me personally, was this ABC top right here. So I took a short from right here, but, we did see a lot of downside price action. But at the same time, even though I thought price action was going to go lower, we see an A, a B, and a C form. So because we have an ABC, even though I think it's going to go lower, I need to hedge my position just in case I am wrong. All right, in that case, I was wrong, and hedging my position saved me some money. So if I take a short from here, and then I take a long from here, all right, as long as they are a proportionate value, all right, meaning that for every single percentage point, I'm making the same, losing the same. If my long gets back up to where my short is, whatever my short was in profit when I took that long, it will make up for that difference. That difference was like 3,000. All right, now I did get stopped out a good number of times here, so I only made about $1,500. Like I said, it's just a numbskull part of my brain, and I missed this entry here. I wouldn't have to deal with that. So yeah, it's just about making sure that it's not about making more money. It's about securing the money that you have already made, just in case you're wrong. People that are hedging and don't get it are typically the ones that are trying to make more money on the hedge trade than what they're trying to make sure that they make double, which is not the purpose of hedging. Do you think it's worth waiting for better setups to increase 1%? Absolutely. How do I decide my stop loss on BTC versus other alts? Personal preference. In order to move price action on BTC, it requires a lot more volume. So therefore, most of the time, it tends to be less volatile than, say, like a low cap altcoin, where like someone that has a $200,000 could easily bump it up 2%. Is there any reason why you pull your... Yeah, because it's real-time price action. All right? The closures don't have any means for me. All right? That's where price action went. All right? So the closures don't really make a difference for me. It's all based on real-time price action. So waiting for candle body closes is not my strategy. What if we have an ABC pattern, aim for long, but C is above A? What? Are you talking about like an ABC flat correction? We talked about that. Did you watch the ABC tutorial? All right. Look at this is what you're talking about, right? All right, let's say that we have an A, we have a B, and we have a C. But C is above A. All right, what do? Well, you're paying attention to the C wave most importantly because that's your last wave. And so obviously if we go lower than the A, that would be our entry. But if not, C wave has its own ABC. So your entry would have been here. We go, why I wanted the super duper low entry. I'm sorry, man. That's how it works. All right, if you can find a strategy that works where you can get those crazy low entries where it really doesn't exist in this strategy, be my guest. Sometimes it does. Sometimes you have an ABC flat correction, you can get almost a double bottom exact. It's all, how price action works itself out. We're not pickers. We're just waiting and seeing what price action does. I have a specific problem. On a larger account, if I set a stop loss to 0.5%, for example, normally the sell dropped down to more than that. That's a part of the problem. All right. I'm not saying that you're not going to get stopped out. That's part of the game. All right. The strategy that I use is not how do I not get stopped out? It's how do I find a position where I can say, this is where I want to be in the trade, and this is where I don't want to be in the trade. And because of that, I can amplify leverage, amplify risk-reward ratio, and make a lot. But it's all up to you. If you want to use 1.5% stop losses, that's absolutely fine. I'm not saying that that's how not to do it. All I'm saying is you will be sacrificing, 66% of your risk-reward ratio potential. That's not a huge issue, because if you are taking larger setups, all right, and you're making sure that you are still getting a good risk-reward ratio, you might have a higher win percentage that makes up for those losses, or the loss of the risk-reward ratio. So let's say, for example, right here, all right, let's say that I was trading this ABC right here. All right, so originally my entry would be from right here. So I go ahead and I set up a entry. And let's say that we set up a 1.5% stop loss. Right? So I would have gotten wicked into this entry right here and right here. So I still would have lost if I had a 1.5% stop loss, and then I would have gotten wicked back into the trade. All right. And I still would have lost even right here, but then maybe you got this entry and you set up a 1.5% stop loss. All right. And you did not get stopped out of that trade. So now on the 2 trades, let's say that I'm just targeting the 0.441 of the ABC. All right. So that would be right here and right here. All right. So look at these R&Rs. I got wicked out the same number of times as if I was using a 0.5% stop loss, but my risk reward ratio was only a 4.63, which I got wicked out 2 times, actually 3 times. No, 2 times. Yeah, I got wicked out 2 times, so I'm only making an additional 2.6 to the account. That's not really that good, all right? So I'm not saying that this is the case every time, and sometimes having a 1.5% stop loss might save your ass. But what are you really saving? 1%, 2% of your portfolio? But then maybe you get wicked back into the trade, and then, you know, if you had a 0.5% stop loss right here, you would have a 13 restored ratio trade. So we got wicked out the same number of times, but now we are making 3 times more. So instead of adding an additional 2 to the portfolio, we're adding 11. Now, hopefully you get what I mean by that. By 11, I mean like if you're risking 1% of your portfolio, you would have an additional 11% to your portfolio after you won that 3rd trade. So, I mean, it's all, what's your risk tolerance? You know, if you're worried about getting wicked out, that's a couple different problem areas to address. One, if you're worried about getting wicked out, it's because you're either one, using a really high risk, and when you lose, it's like taking a punch in the gut, or 2, ego. Nobody likes losing. It hurts. But if you the better you become friends with losing, the better you're going to do, because that means you can keep a cool, level head when things are not going good, and it doesn't mess up what you're doing. Let me elaborate. Because the stop loss is normally a market order, my loss normally ends up to be when I get stopped is more than 0.5%. So you can change your stop loss to work off of market price rather than the last price if you're having that issue. It's very simple. You just go into your stop loss, and up at the top right, so like right here I have a stop loss USDT. You can change it from last traded price to index price to market price. So if you're having that issue, you can do that. I'll be right back, guys. I have to use the bathroom. My room's messy right now, so. Yellow. Did I change my chair? No. Show my positions? You know that Bybit has the thing. Like, yes, show your positions. I don't know if you're doing that because you're being an asshole or you're trying to copy me, but got a short on sushi going on. Exactly like I said. What's a good amount of capital to go full-time trading? Like $100. Now that's, I'm saying $100 because you need to see that you can appropriately turn 100 into 200, 200 into 300, 300 into 400 before you even touch anything. All right. But in terms of like, if you want to, make trading a career in terms of like something that you can reliably, pay your bills with, yeah, you'll need, 30, 50, $200,000. And that's not me like being pretentious and like being like you need to be rich in order to do this. I'm not saying that you need to start with that. You can build to that, but just don't have the expectation that, you're starting with 1,000. You're going to become a full-time day trader and pay your bills with it by next month. It's probably going to take a good couple of years, 2, 3, 4 years to learn what you're doing, make the mistakes you need to make, and then hopefully, have one of those luck periods where like things can really go the direction you need them to go in order to build that account from like zero to hero. With the $100 portfolio that we made into $100,000, that was during the very beginning of the bull market. All you had to do was take breakout trades, compound your portfolio, and you could make stupid money. All right. But that's not now. That's not a reality right now because we're not in that type of market. So, $30,000, if you're bringing in 10% of your portfolio's worth per month, that's $3,000. So if you have $4,000 worth of bills, you're only going to be able to supplement $1,500 of your bills with trading. Why do I say that? Because if you're only bringing in 10%, all right, you want at least half of that to go towards compounding the portfolio to hopefully make it easier to get to a higher dollar amount. So then hopefully you get to like 100,000. Once you get to 100,000, if you're bringing in 10% of your portfolio additionally per month, all right, that's $10,000. So now if you have $4,000 worth of bills you have to pay for per month, you have 10,000 and you still have 6,000 left over after paying your bills that can go back into your account in order to make sure that it's easier and easier and easier to pay your bills every single time. And don't forget about taxes. All right, taxes are also going to be like, 35, 40% capital gains. So, I mean, you got a lot to look forward to. You got to have a lot of money if you want to make money from trading. You were emceeing at the beginning of the bull run, weren't you? No, not even close. I stopped using Market Cipher all the way back. I stopped using Market Cipher like around here, this region. So it was a good almost a year until the bull market after I stopped using Market Cipher. So I had Market Cipher from like February, March, all the way until the end of that year. So about a full year. Are you only trading in this challenge, or do you have a main account? I've always had a main account. And I do have a different way of doing trades on that. I do focus on more macros. So like, say for example, these levels in particular are what I focus on when I'm trading on my main portfolio. I don't focus on the small time frames on my main portfolio. There's just no reason to do so. Because that money is like real money. All right, when, obviously these small portfolio accounts, we build them into a quite sizable amount once we're at the end of them. But when they start out, they are play money to me. This is stuff that I could lose again and again and again and not be mad about it. But my main account, if I really take some huge losses on that, that's stuff like that messes up my future. So, and just for the sake of my safety, not only involving the amount that's on the accounts, but the accounts themselves, them getting hacked, stuff like that, I have a lot of safety precautions physically and on the internet in order to have that, make sure that nobody can get to that. He has a cone because he keeps biting his tail until it's basically bleeding. It started because he got fleas, and I understand he wants to scratch, he wants to bite because they suck. But so far, I've checked him up and down. He doesn't have fleas anymore, but the residual wounds that were inflicted because of that, he keeps licking them and biting them. So I have to keep the cone on him in order to make sure that they can heal properly so he doesn't do any more damage. What is the biggest amount of percentage loss on your main account? You lost on one day? 20%. And that was from that we talked about that big mistake today. What's one of those mistakes that I would advise no one to ever do ever? And that was holding on to losses. DCAing a losing trade in order to push a liquidation back and back and back. I ended up losing 20% of my portfolio, which was a lot of fucking money because of that one dumb decision. And from that point on, I never made that mistake again because that was one of the worst feelings I've ever had in trading ever. I had made so much money from going from 3,000 to 14,000 that after we got stuck in that descending triangle, I made that dumb decision and I lost 20% of my portfolio overnight. And it hurt so bad that it scarred me to never do that again. So that's why when I saw Ryan Matta doing it, I told him, I was like, don't do that. one, as an example to people on YouTube, and two, for yourself. And he ended up losing a lot of money. You know, and like I said, Ryan's my dude. He helped me out a ton, and he's a friend. But it doesn't mean I have to agree with every single decision that he's putting out there. Why did you set a 0.441 fib for the sweet spot that you're aiming? So like I said, the 0.441 comes from the fact with Elliot waves, you know, the 1, 2, 3, 4, 5s. All right. Typically after wave 1, wave 2 is going to retrace to the 0.382 of wave 1. And then, you know, wave 3 is supposed to be the 1.618. And then, wave 4 is supposed to be the 0.618. And then wave 5 is supposed to be the 1.618 of, you know, not necessarily, you know, just like that. So the 0.441 comes from the fact the 0.382 is what my target is, but I always like to take profit before everybody else because sometimes we don't get the 0.441. So like right here, for example, I was counting 1, 2, 3, 4, 5 structures, and I was targeting the 0.382. All right. And I was waiting for that number wholeheartedly. I was waiting for it. And I missed this entry. Now, it wasn't on BTC necessarily. It was on Ethereum. But you can see it tried to get to the 0.382, but got to the 0.441 and then went up. So sometimes it goes past the 0.382. Sometimes it doesn't. I just like to take my profit there just to be sure. That's all. Josh V, yo, hello, how you doing? What's going on? What's happening? It's my nephew's birthday in 3 hours. Actually, 2 hours. What's the best risk for a small account using ABCs? Well, there is no best risk. All right, we've talked about, Kelly Criterion. All right. Technically, if we were in a perfect world and we had like a 15% win ratio and we were walking away with 9-to-1 odds, a 5.5% risk would be the optimum number to use. If you had a 20% win ratio, I believe that would go up to a 10. All right. Yeah, so 10%, if you have a 20% win ratio, is like the maximum you should use. If you have a 15% win ratio, 5% is what you should use. Now, I always recommend that you should not use full Kelly. So if we're only winning 15% of the time, and when we do win, it's an average of a 9 restored ratio trade, then I would say use 1%, 2% at most. All right, but if we're hitting, 11 restored ratio trades, that bumps up to a 7. You can see how that works. Let's play the Kelly coin flip game. So for anybody that has not seen this game before, we played in the past, and this is a really good test of somebody if they understand how restored ratio works. So depending on what your win ratio is and what your average takeaway is, you're going to be able to find out what is the maximum that you should ever bet. So in this game, all right, this is a static game. So heads always has a 60% chance of winning. And then your objective is to get to $250. All right. So let's see. All right, if we're starting with $25, let's see if I win this game. Oh my God, this is hurting my back for some reason. Luck is just not on my side today. ABC. We're getting there. This is how it can be sometimes, guys. It's just luck of the draw sometimes. ABC. Hopefully this is... Oh, God. Why did I sign up for this? I have a 60% chance to win every single time I click this button. For some reason, I keep losing. ABC. All right, we're getting somewhere. Jesus Christ. All right, so hope you guys see. If you guys just stick through the shitty times, sometimes you'll hit that win streak. Jesus Christ. 135 flips. Ridiculous. But for anybody that couldn't see what I was doing, all right. So if you understand Kelly Criterion, you know that there is a logarithmic curve of where to sit in terms of what you're betting. All right. So in that case scenario, I'm winning 60% of the time. All right. That's what my odds are. If I always bet on heads, I have a 60% chance to win. When I do win, I walk away with 2-to-1 odds, meaning I'm making double what I bet. So, full Kelly would be about 40%. All right. I was using 20%. So I was using half of full Kelly. But if you bet over 40%, you have a larger likelihood to go bankrupt. Doesn't mean that you will, it just means that you have a larger, more than safe. Bust a freestyle about ABC's Kite. Yeah, ABCs. That's what I like to see. Right in profits where I want to be. I'm gonna grow my money like a tree. There you go. When will I publish the full track? I don't know. It's a work in progress. And guys, I have an update. I no longer will be using ABCs. From now on, I'm going to be using ABCDs. Nuts. This is the new strat. ABCD's nuts. Yep. You heard it here first. It is a work in progress, but it's so far promising. Dogecoin, ABC. Can't believe Bybit made me put Dogecoin on my list. How would they do that to me? I see what you mean though. Decent. Got a little some going on. I think in like 20 minutes or so, I'm not going to end the live stream, but I am going to stop the trading part of the live stream because I haven't run out of energy yet tonight, and I really don't have any plans. So I'm probably just going to play video games on live stream. You guys can still ask trading questions, but I'm probably not going to be looking at the chart all that much. Just because we got our entries in, and I mean, nothing really interesting is happening. So, I mean, I'll still be here, but I'll just be playing games. I gotta check it first. I don't even know if it's gonna work because sometimes trying to live stream and play video games doesn't work for me, even though my PC is like a beast. There's something wrong with the Windows settings or something. Someone gave the recommendation to look this guy up on. It's called Stream Beats by Harris Keller, and that's what I'm using right now. And I'll play a little bit of some. I'll play maybe Call of Duty and then maybe some Halo. I know it's not everybody's cup of tea. I figured I'd do it. Lately, I've been trying to keep the amount of trades I'm in into like 1 to 2. Trying to keep track of like 5 different coins can make you miss some really good entries. You explain the ABCD. It's the same. It's the same thing. It was a joke. It was a joke. It's still just an ABC. It just adds one more letter. That's all it is. When I was a kid, back on PS2, I used to play Gran Turismo. Not so much anymore. Important question about the ABC strategy. Have you tried to get in only on retest of the A level? No, because yes, sometimes it will work, but a lot of the times it won't. Like right here, for example, there wouldn't have been a retest. You can do that if you want. Like right here, for example, there wouldn't have been a retest. There would just have been a dump. Right here, no retest. Right here, you can get in on the retest, but it would have been a little bit rocky. I just play it when it crosses. Ain't no shame in that. ABCDE strategy. Oh, that's pushing. That's pushing it. That's too far. Too many letters makes it too complicated. What's the difference between log charts and normal charts? So normal charts are linear based off of price action. So let's say, for example, I'm looking at the larger time frames here. All right, you can see how down here this looks like it's insignificant, like it's nothing, and then this looks like it's a massive, parabolic rush. All right, but down here, this tiny little bit of information is 56%. But over here, in order to get 56%, it's like 20 times the size. Log scale makes it so that your price looks proportionate based off a percentage. So 50% down here, or 80%, and then 80% over here is the same exact size. All right. It just makes it so that everything is symmetric based on percentage. Hey, you know where I'd be. Mad profits, all I see. That's pretty good. That's a good one. The Ligma strategy. Yeah, that ninja's got Ligma. Duper. Gotta run. Later, bro. See you, man. Am I in a trade? I'm short on sushi right now. Thoughts on Doge? It's got an ABC setup. Someone pointed that out earlier. I mean, I haven't changed my thoughts. I don't trade coins like that. By all means, you do you do. But I see no shame in like approaching those types of coins, because I mean you can say the same thing about sushi. I see no shame in approaching those coins with, you know, risk management and, you know, finding if this and that statements. There's nothing wrong with that. But those coins from like a regular person perspective, they're just electronic lottery tickets. That's all they are. People throw their entire, you know, life savings into them, thinking that they're becoming millionaires because they saw some dude on, you know, YouTube do it. Can you tell me the name of the background music you used in the last 2 live streams? I already told you. All right, this dude right here, Sam Heller, or Harris Heller. Another important one, to triple your account, for example, your calculator shows 500 trades later, you might reach it, but I only take about 1 trade per week. Would take 10 years. Well, I mean, that's just if you were using like the 9 restored ratio. So like if you're taking like 1 trade a week, like let's say you took this trade right here, all right, and you were targeting the 0.441, let's say that. All right, so let's say that you kept your strategy to only the most noticeable high time frame ABCs. All right. So for this example, you know, we're entering around here. We'll set up our stop loss. All right, let's say that we got stopped out, you know, 2 times, even though it looks like we probably only would have gotten stopped out once. Let's say 2 times. All right, right here, for example. All right, that is a 90 restored ratio trade. So let's take that into account. Let's say that when we do make a trade and it's a winner, it's a 45%, you know, a 45 restored ratio trade. So let's say that we only win 20% of the time, but when we do win, it's a 45 restored ratio trade on average, and we're starting with $1,000. Let's say even 15% on that, but and let's say that you take 1 trade a week. So you're taking about 4 trades a month, and then so 48 trades a year. Let's say that you use like 1% risk. Oh, you just 12x your portfolio. Let's do it again. Oh, only a 5x this time. Ugh, market's shitty. Oh my goodness. Okay, you get the point. You get the point. All right, if you're only taking 1 trade a week, it's probably very, very high time frame trades. So you're probably looking at much higher risk-reward ratios. So it's not going to apply the same to you if you're just, you know, cashing out at a 9. You show the setup for the ABC on Doge. Why not? It's right there. All right, the entry's already gone. But the entry was 16 cents-ish. Other than books and Trader Tom? Nah. Nah, nothing. If you want to learn Elliot Wave, you got Filicone. Filicone's a good dude. You know, I mean, you know, I don't like necessarily like think his entire demeanor is like the best, but he knows what he's talking about. How old are you, Kite? How many girlfriends do you have? I'm 22, got 0 girlfriends. Fun fact though, every single girl I dated has had the same name. I don't know. Maybe someday in the future, I'll get my life under control, start hitting the gym more often, and then I don't know, go to the shady part of town, rolling around in an S class. Hopefully I don't get shot. I'll just like pull over and be like, "Hey baby, what's your name?" Is it because you've only had one girlfriend? No, I've had 3. One was like a longer term, like kid type ordeal, where like we're growing up through like middle school and high school, and then one was when I got a job, and then another one was like a short term fling type thing. I don't know. The way my life works right now, it's just I don't see it happening. A couple different things that lead up to that, I don't think I'm gonna have enough time to dedicate towards that person I think they would deserve. And because of the situation my life is in, my love language is probably gonna be money, buying them gifts and stuff like that, taking them out to dinner. And I don't think that either one, the person I find would reciprocate that as love. It just seems like I'm trying to win them over with gifts. Or the person that I do find is the, gold digger type that expects that kind of stuff. What's your name? Tony. What's your name? Ezekiel. Hey, Ezekiel. Fuck you. Oh no, I think it's backwards. Hey, Tony. Fuck you. Are you gonna teach your kids how to trade? I don't think so. But one thing that I will be able to teach my kids is more risk to reward type thinking. Because, I mean, that doesn't just apply to trades, it applies to everything in life. I learned risk to reward ratio from candy. Really. I mean, I bought a box of Airheads for $8 and I made a 3-to-1 risk to reward ratio on them. Whenever I would fully sell the box, I made $24. Or I guess that's a 2-to-1 risk to reward ratio, but I was willing to lose $8 because what if I didn't sell the entire box? Oh my gosh, is that your car? Yeah, baby, just the S class. Got massage seats. You want to come sit? Exactly. That's how it's gonna be. Dude, once I got that tire fixed, man, that thing is a dream. Because like since the S class, even with the bent rim, it was still smooth as butter. Like I could feel some vibrations in the steering wheel, and it was a little bit rougher on turns. But after I picked it up, it's like a world of a difference. I love that car so much. I have mixed feelings about the 2021 and 2022 S class. I think they look nice, but I don't know if I actually like it. Because for me, I get a lot of people like touchscreens in their car, but I feel like it takes away from a lot of the experience. I like not having a touchscreen in my S class because that way the screen doesn't get dirty and I constantly have to, wipe it down. And obviously it keeps everything at eye level, so I don't have to look down to change stuff. But by the time I'm ready to upgrade my car, like I said, that's 5-6 years down the line. Hopefully they have a new version of the S class, and hopefully they change some stuff about it because, like I said, I don't not like it, but I definitely prefer the 2019, 2018 S-Class to the 2021. 2021 looks futuristic, but at the same time, I don't know. I just don't know if, like, I'll show you. All right, so 2018 S-Class. All right, the 2018 S-Class. Looks like there's no like good angle. Hold on. Okay, maybe this one. All right, this is what the 2018 S-Class looks like. Now it's got a nice wraparound wood. It's got the 2 dash. He doesn't have that screen on for some reason, but it's got, you know, the 2 screens for the dash, and it has like a wide open console with some, you know, buttons for all the good stuff. And then the 2021 S-Class, they moved everything to a digital screen. So like to change your seat, you have to use the center console touchpad. To change the temperature, you have to use the center console touchpad, everything. And it does make it cleaner in terms of like there's not buttons everywhere. And like I said, it looks good, but I don't know if I like it better. That's all. The LEDs are way better because they use like this diffuser that goes around the edges. So it can be like direct LED instead of like ambient. But besides that, I don't know. Like I said, it still looks good. I just don't know if I like it better. That's all. How can send SS to you? What do you mean by SS? You have mixed feelings about this December? Yeah. Like I said, I was pretty confident in us trying to go and hit the 85K region. And we still could, you know, this could be definitely a large A and then B and then, you know, C. Who knows? We'll see how it works out. I mean, that would definitely be something cool because, I mean, we had, you know, kind of an ABCA, ABCB, and then maybe this is just like an ABC C wave. Who knows? Did you have any other car in mind when you before you bought the S-Class? There, you know, so there's 3 models, one from BMW, one from Mercedes, and one from Audi. And there was like different, like the BMW was more sporty in terms of like it had a little bit better handling. The Audi had the worst handling. So like the Mercedes is like the good mixture between the two. And then when it came to design, the BMW and the Audi just, they had a little bit better technology, I will say, in terms of like they have more like the Audi had tablets in the back seat instead of screens, and the BMW used a touchscreen. Like I said, I don't really like the touchscreen, so I went with Mercedes just because, well, I already had a Mercedes, so I know what I'm expecting. I like the gear shifter. Instead of having it in the middle console, it's on the wheel. The Mercedes just looked classier. You know, obviously the outside looks good. You know, it's like, you know, chrome and the wheels look good and everything like that. But from a distance, it doesn't look like a super expensive car. That's what I want. I don't want my car to be a standout car. You know, if I like park it in a parking lot, I don't want people to be like, oh, that's the car I want to rob. I mean, when you have a supercar and stuff like that, it stands out. I don't like that. I don't like to stand out. You know, I got lots of money, but when you see, like, if anybody lives in the Richmond area, and is, around, like goes to like the Chesterfield Mall and stuff, or the Chesterfield Town Center, you'll typically find me in that area most days. And I mean, if you guys are in Richmond, if you guys head down to the Whole Street Planet Fitness, you guys could probably find me there too. Not an invite to rob me in the parking lot, all right? But if you are in the Richmond area and you want to say hello to me, get a Planet Fitness membership. You'll see me one day, and we can have a good chat. You'll typically find me wearing like an oversized hoodie and khakis. I don't look the part. I'm not in, like a full suit and tie out here trying to flex on people. I just look like a random dude. He said, come find me, find out. Come to Planet Fitness in Fairfax, I'll train you. Okay, so the reason why I would want to live up in like Alexandria, Fairfax, is because you're closer to the Micro Center. And I love the Micro Center. It's like the Toys R Us, but for me. But the traffic and just the housing prices up there are ass. I think Fredericksburg is like the sweet spot. It's metropolitan enough to where like on a really busy day, yeah, the traffic sucks, but it has everything. Fredericksburg is popping. I mean, if you bought like any property around like the Spotsylvania, Fredericksburg area, like 20 years ago, your business is booming. Your property value has gone through the roof. BTC stablecoin now. Dude, I saw this video. Somebody in my Discord asked me about a coin. G-Yen. So, I was just trying to do some research for the person, and I typed in G into YouTube, and I found this little baby boy. All right, basically saying that Coinbase is a scam, and everybody in the comments like, yeah, let's sue Coinbase. Let's sue Coinbase. So essentially what happened was, G-Yen got listed on Coinbase. And obviously, with people just being people, they see something listed on Coinbase, so they just get into it without doing any research on what the coin is. So G-Yen is a stable coin for yen. So it is worth 0.008 cents per coin. It is a stable coin. But because so many people were rushing into G-Yen the second it got listed, it skyrocketed all the way up to 6 cents. Like 600%. So then when Coinbase put more G-Yen into the circulating supply, it dropped all the way back down to what it's really supposed to be, which is 0.008 cents. And people are all pissed at Coinbase because they screwed up. But you were trying to pull a fast one. Like, correct me if I'm wrong, but you're trying to pull a fast one. You're like, oh, I'm going to make it. That's like me dumping $1 million into USDT and it goes up, 20%. I know what USDT is. It's supposed to be worth $1. So eventually it's going to go back down to $1. But people are dumb. People are dumb. Stupid, stinky people. Brad, what's going on, man? How you doing? Please update about BTC movement once again. What do you mean? There ain't no update. Then she hears a stablecoin now. Like I said, I can see some sort of ABC top right here. Means that it might come back down a little bit. To be expected. It's got to, you know, if you're looking at it from an Elliot Wave perspective, it needs to form some sort of 1-2 structure. If you're looking at it from a pattern perspective, you want it to form some sort of Adam and Eve. We got a bottom. All right, we got to bottom out. It's not just going to be a bottom straight to the upside. All right, you can see right here. We have a sharp incline to the downside, comes back up, starts trickling down, starts forming a bottom, some support to kind of play itself off of, and then it has a pop to the upside, will come back down once again. All right, we got to form a bottom. It's going to take a little bit. Ain't no immediate thing that can be said about BTC. It's got to work itself out. Now I'm not playing BTC at the moment. I have a short on sushi with kind of the same ordeal. Looking for it to come back down to the local low or the 0.441, whichever one it chooses. You can see right here we have a pop to the upside, ABC, and then we had, you know, a smaller ABC structure right here. So I'm short on sushi from like 5.95. My actual entry price was 5.91. So I missed it by a little bit. I got in like right here. What is your outlook on NFTs? I think what they currently turned into is kind of trash. So, like, let's say you have someone like Banksy, you know, a reputable artist, and they make one of a kind art, and they just so happen to sell it as an NFT. I think that's perfectly fine. It's a one of a kind art, and it's a verifiable digital asset that someone owns. Now, most people are going to go, well, someone can just copy paste that. Yeah, of course they can. All right. It's the internet. People can copy paste, they can screenshot, do stuff. But do they verifiably own that artwork? No. Stuff like concert tickets, digital tickets can be used with NFTs, musical masters, copyrights to video games, stuff like that. I think NFTs are perfectly fine. Or if you have an NFT based video game, you guys saw me get into Z.Run, a horse racing game where you have NFT horses. That's pretty cool. I like that because, there's a use to it. But procedurally generated artwork is absolute garbage. Absolute garbage. It's just taking one thing and then adding something to it and then passing it off to 1,000 different iterations. Stupid. All right. Now a lot of people go, well, why is it different with Pokemon cards? Because Pokemon cards are established. They're not just one offshoot NFT skull guy. All right. It is a living, breathing entity. There's TV shows, mangas, 20 years worth of history behind it, and nostalgia and hype. That is why that artwork on that, playing card is worth that much money. There's so much history behind it. Your skull guy that was procedurally generated from some frat boy, it doesn't mean anything. It doesn't have any history. It's stupid. But you know, like let's say in the future with VR, like let's say Neuralink hijacks all your sensorial systems, puts you in a virtual environment where you have virtual assets like cars, houses, shoes. You can have NFT cars, NFT houses, NFT shoes, NFT guns. That's where I think it would be really cool, where you need verifiable, digital assets that somebody owns. But this current crap that's going on is absolutely useless. And the people that are trying to flip this stuff, Lord help them. Because, I mean, unless you can find some sort of niche where, like, it's severely overhyped, are you going to you're going to make a good living off of NFTs. If you've done it, congratulations, man. You are definitely one of the very, very few, but that does not mean that it's a good thing for everybody to get into. Not at all. Now, if you want to invest in coins that are related to NFTs, like, Matic and stuff like that, that I can see, because you're not taking advantage of the NFTs themselves, but rather the backbones of what is, like, fueling that flame. That I can see, people getting into, but flipping NFTs, yeah, have fun with that, buddy. I don't know anything about the MicroStrategy event. All right, if I did, I would have said something already. Like I said, the 0.441 is simply because in Elliot Wave, when you have a 1-2 pullback, the 0.382 is usually the target. So given that fact, I chose the 0.441 so I can take profit before that target is hit. That is all. All right. Now, if you're drawing your fibs correctly, my 0.382 is actually the 0.618. All right. I draw my fibs backwards because I'm used to doing it from Elliot Wave. Obviously, if you're doing Elliot Wave, you're supposed to be using fib extensions like this. Let's see. Trend-based fib extensions. So if you have like a 1 to a 2, all right? But for me personally, I found it to be more effective just to use regular fib extensions. All right, let me load up Call of Duty real quick and see if it comes across on the stream correctly. Brad, for some reason I read that in a Donald Trump accent. The MicroStrategy event is not a big deal. Very small. Not a big deal. Very small. Minuscule even. Very small. Very small. That just blew up my eardrums. It didn't, like, it doesn't come across on the stream side because I don't have the B1 and the B2 active. But that just blew my eardrums out of their sockets. That hurt. Let's see if we get a good frame rate and everything like that. Would you consider the April top as the current top of NBC market? Yes, for right now, absolutely. Like I said, it could be working in like a 3-wave set where we have an ABCA, ABCB, ABCC, but only time can tell. Are you guys ready to watch me absolutely demolish people? Hi, Crypto, you're a gentleman and a scholar. Have a great night, pal. Thank you, man. I appreciate it. I do not want to play shipment. Let's see if we can find a Modern Warfare Classic. I know. I do that on many other games, but I don't really need it on Call of Duty. Like on New World, I would use, you know, like the saturation and the sharpening effect. I don't even know if it's going to come across properly because sometimes when I start playing video games or try to record them, it drops the frames too rapidly. Oh, I just punched my microphone. I'm so sorry. Like I said, you guys can still ask trading questions. It's just, you know, we've kind of surpassed talking about the price action and everything. I just want to stay on live stream, talk to you guys. So there's no shame if you guys don't want to watch me play video games. I get it. I understand. All right, it's getting like, it's very choppy. I don't know if that comes across on stream. Usually I get around like 200 frames per second, but now I'm only getting like 90. But I'll try my best. Oh yeah, it's definitely choppy. Jesus. I don't know how to make that a little bit better on my side. Someone's car alarm is going off. Oh, it's my neighbor's driveway. Maybe if I use maybe if I try to use game capture. That didn't help at all either. I'm only getting like, it's jumping around too much. You have neighbors? I thought ABC trading was working for you. That is the best insult that someone could have made. Oh, it was Johnny on the spot. Okay, I see, I see. Even with this choppy frame rate, I'm still doing at least decent. See you, Brad. I'm out. Oh, come on. I don't think they have ground war in this anymore. I know in the Vanguard they added like the I don't know what the name for the pacing is, but they added a ground war type game mode where it's more players. Oh, come on. Look at this gun. Oh, Jesus. I don't know what to do. I don't have my guns. Of course, of course. I don't know what I can do to make this a little bit better. Maybe I give Call of Duty more priority? I mean, the priority is already high. I'm not sure. Because, I mean, I have all my settings down pretty low. Texture resolution doesn't really matter that much. Can turn that down lower. I could... Oh, wait. Let me try full screen. Maybe that helps choose. Doesn't look like it. It's always the dude with the shotgun. Every time. Ruins everything. Ooh. I know, those people suck. Always the shotgun guy. He has a shotgun and an RPG. What is he doing with his life? How is that fun? I might try to restart the stream and maybe lower some of the settings. Because I'm outputting at 1440p, so maybe I just need to lower that to 1080p or even 720. And I can also just retitle the stream Call of Duty so that people aren't coming in hoping to be looking at price action. I'm going to do that. All right, so I'm going to restart it real quick.